Welcome back. Hope you're having a good morning. Siddhartha Khemka, the head of retail research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning and good to see you win. Well, the top stock today could be Vedanta. They've come out with that QIP. If they can raise that, that's say $600 million that they're talking about, which could probably be yes, given the kind of time that we are in the cycle. The Fed could cut rates, that'll soften the dollar index and in turn help base metal prices. What's your view on the stock? It went all the way to around 500 plus, and then it saw more than a 10% correction from the top. But once the QIP is in, the promoter selling doesn't come about, and it opens the it helps the financial matrix as well. Your view at 460?
Yeah, good morning, Nigel. Glad to be on the show. So yes, I think Vedanta keeps coming up with some of the other news developments and on the news flows. So this time the QIP, they had earlier taken the shareholders' approval to raise up to 1 billion from equity issuance, and then I think this QIP is in line with that. For this financial year, their debt obligations repayment is in excess of 1 billion. Last year, they did a dividend payment of almost 18,000 crores. So somewhere the maths, cash flows needs to match. And as you rightly said, yes, the Fed rate cut around the corner will be definitely positive for the metal companies, and the stock has been doing well. If you see the last quarter numbers has been pretty steady. This quarter also we are expecting a steady quarter. At the current valuations, I think the QIP definitely helps manage the cash flows. There will be less pressure on the internal accruals. And going forward with the company also having taken approval for demerger into 6 separate units, this will be, I think, at least in the near term, very positive. So we have a target price of 520 and a neutral rating, but we see this QIP as a positive development in the near term.
Siddhartha, morning. Do you look at AngelOne? It's been a big beneficiary of the financialization of saving India's equity boom. But the last couple of months, AngelOne hasn't participated in the up move. Year to date, the stock is down 35%. And now even the Q1 numbers, they're not great. Profits are down 14% on a quarter-on-quarter basis. Thoughts on AngelOne from here?
Yeah. Good morning, Rima. So if you see the results have been pretty strong, numbers have been pretty strong. The entire broking industry has been getting record volumes, and the same was with AngelOne. Especially if you look at strong growth in both F&O as well as cash segments, the gross broking business has grown 65%, F&O 65%, cash segment 81%. And the key concern here is that there are regulatory overhang on this sector right now. There are talks of how SEBI wants to curb the tail end of the F&O trading, which in India is among the highest globally. And that is something, as I said, is a kind of an overhang on the sector. We have seen a lot of regulatory changes, a lot of regulations on the capital markets, but the volumes continues to surge. So we believe that the near term there could be pressure until clarity emerges on the way forward in terms of the lot size, the margin requirements, even the overhang on the taxation on the capital gains in the upcoming budget. So these things are keeping the capital market stocks a bit on the cautious side. But bearing that, we believe the capital market theme in India and the financialization of savings would continue to grow, and that should do well over the long term.
Well, yesterday one of the big movers was Zomato, because they're going ahead in increasing charges and in fact monetizing it. And now volumes as well are moving up. So that's why, in fact, that stock hit a fresh 52-week high yesterday. We're still in conversation with Siddhartha Khemka. Sid, what do you make of this one? In the last 1 month itself, the stock is up close to 25%. Last 1 year, it's up even more. Your view on the stock at these levels of 230?
Yeah, Nigel. So if you think, on the e-commerce platforms, they have started charging the platform fees and slowly and gradually ramping it up. So from 5 rupees to 6 rupees, that is almost 20% hike, which is a good percentage hike for the profitability of these companies, and it has been well accepted across the market. So I think that's a good step to improve profitability, and that is what the street was hoping and expecting for. Apart from that, if you look at Zomato, the quick commerce Blinkit has ramped up at a much faster pace than expected, even in terms of profitability. So view is definitely positive from here on. We believe that the penetration of e-commerce and the duopoly nature makes Zomato a very interesting case even at these levels, because of the growth, improvement in profitability, and the increasing opportunity in the Indian markets.
And if they didn't have enough triggers, I'm reading an article which states that certain states may allow home delivery of alcohol as well, via quick commerce platforms like Swiggy, Big Basket, as well as Zomato. So additional trigger if in case that's allowed.
Yeah,
Okay,
I think that.
Yeah, go ahead, sir.
Yeah, so if you look at some of these e-commerce platforms did try to do home delivery in the times of COVID for the alcohol, and if that does happen by certain states, it will be definitely additional positive trigger, especially for some of the quick commerce companies. What I also read is, for example, beer and wine to be started with earlier. So it could be another 5 to 6% of the overall business opportunity for them right now. Given that still a lot of this alcohol consumption happens out of the home. So while it reads to be a good opportunity, I think the initial opportunity size could be smaller to start with.
By the way, Rima, you were talking about AngelOne, I think, with Siddhartha earlier,
yeah.
right? I was just reading the Money Control written a piece, basically comparing discount brokers, and I found it very surprising. The gap between Zerodha and AngelOne is now very, very small.
In terms of market share?
In terms of active users.
Active users.
So, it's the chart over a 1 year period is exactly the opposite. AngelOne has grown, and Zerodha's, the numbers, active users has come off quite a bit. Just another one of those things, but it's a space, it's not really what's of course influencing these brokers. There are not that many listed brokers, but there's Motilal, there's MK, there's Angel. From a broker perspective, is not, I guess, market share, etc. Right now, it's essentially regulatory risk, as Siddharth also pointed out earlier. Siddharth, just a few other names, and just throwing these your way. The Mazgaon, the Garden Reach, the Shipping Corporation, Cochin Shipyard, essentially shipping companies, they all came under some selling pressure, but they've all been such large outperformers all of this year, and I think over the last 1 year as well. What do you do with these if you have a position?
Yeah, it's a difficult call, Prashant, to be honest. While we don't have active coverage, these stocks have seen a massive run-up. And if you ask me, if someone has a 5-year horizon, I would definitely recommend to hold. There will be bouts of profit booking given the sharp rise, but the opportunity size is huge, is immense. The government's focus on making in India, spending on defense, and the newer trigger of exports, that is only adding to the overall growth opportunities. A lot of these companies are definitely adding capacities, but again, in the near term, there are two risks. A, the market is at all-time high. The stocks have seen a massive rally and run up. So definitely there would be bouts of profit booking in between.
All right. We'll leave it there today. So thank you very much for joining us. Good conversation as always. Appreciate it here on CNBC TV 18.